Thank you. I want to stick with Netflix, bring in Ross Gerber, whose investment firm Gerber Kawasaki is also an investor in Netflix. Ross, this has got to hurt.
Yeah, well, it hurts for sure on the short term, but if you're a long-term investor like we are, I bought a little bit myself today, to be honest.
Why? Why do you think the sell-off is overdone? Why do you see potential?
Well, what's changed is really, in my mind, two things. Number one, I don't really see the competition as really being the biggest issue from other streamers. The competition is with real life, and real life is back, and people are going out, and people are going to Vegas, and people are going to Disneyland. And the problem is they're just watching less Netflix. And when you look at how many people are getting Netflix for free and what that addressable market is, which is actually a third of their total subscribers, Netflix still has a lot of room they can grow. I think another thing a lot of people aren't talking about is this could be a byproduct of the work from home culture. Netflix has really struggled with the work from home culture because making movies and content is a collaborative process and has been very difficult. And Netflix has called all their employees back into the office. That's starting, I think, this month. And I think Reed Hastings and the team there are the smartest people in Hollywood, and they're going to figure out new ways to monetize their brand. And I think we just have to change the metrics that we're valuing Netflix with towards earnings growth and away from subscriber growth. And when you look at that, Netflix is a very cheap stock.
So let's talk about the ways that they could unlock new growth. One, cracking down on password sharing. How much growth is that really going to unlock? Then, of course, there's the idea of an ad-supported model, a tiered model, gaming, or maybe it's just making better content, which of all of those options seems to be the hardest.
Well, better content is sort of a nonsensical thing. Right now, they have the most watched shows on television currently. I think it's Inventing Anna, which my wife is watching like nonstop. They have the best producers in Hollywood, and they have every great project in Hollywood. So the content isn't the issue. The issue is monetizing the content in ways that they haven't in the past. And I'm a big believer that Netflix needs to reinvent the theater experience around their shows and movies. And there's many ways they can monetize between merchandise, events, and communities they could build around their content, which they currently are not. Secondly, you've mentioned two, I think, very important areas, which is an ad-supported Netflix Lite, which they take $0 in on ad revenue. And you look at a model like YouTube and how much money they're printing on advertising and the engagement. Netflix has the same engagement level as YouTube. And if they ran ads, they would be very successful, and I would advertise on Netflix for sure, And so that's another thing. And then, of course, half the people in my office don't actually pay for Netflix. So I asked them, well, what would get you to pay? And it's the same thing with iTunes and music, where people didn't want to pay until it became a hassle to do it. So Netflix can employ several strategies to start monetizing these users. And we suspect they could capture another 20, 30 million users, maybe at a lower rate of cost, of revenue. But certainly there's a lot of growth when you got 100 million subs who aren't paying.
All right, Ross, you are also a Tesla shareholder, and the Tesla earnings call has begun. We've been listening to the CFO deliver some prepared remarks, and Elon Musk is speaking now. We're going to bring you headlines as those roll in, but curious what your thoughts are on the results. Look, Tesla's had a better report than certainly Netflix yesterday, but a lot going on in the world of Elon Musk. Does it bother you as an investor that there are all of these many distractions?
Well, clearly they're not affecting Tesla's focus. Elon sort of lives on another planet we call Mars, and he doesn't sleep, and he has a tremendous passion for making the world a better place and doing it profitably. How he's executed with such a difficult supply chain environment and manufacturing environment further shows the dominance and the moat that Tesla has built around their business, and the foresight that Elon has in being able to deliver so many vehicles profitably in this environment where no other company is doing that in their industry, whether it's traditional cars or EVs. So where I think the lack of focus at Netflix has caused them to drift a little bit, and now creating an opportunity for long-term investors. Tesla obviously is a fully valued company that's executing really, really well, and I think will continue to for a long time. So this is really a special time for Tesla because next year looks even better than this year, and they're executing beautifully.
The CFO has been digging into this idea of, the impact of the production shutdown in Shanghai,
Right.
saying they lost about a month of build volume there. They're working back to get full production as quickly as possible. But how big of a concern is this ongoing, given that the Shanghai factory is such a linchpin of Tesla's production strategy?
Yeah, and I don't want to minimize the concern because I think this is the biggest risk to many companies, not just Tesla right now, which is China's failed COVID policies are creating huge problems, not just at Tesla, but also at companies like Apple and others in the hardware business in technology. So we're seeing, and other industries as well. So we're seeing continued disruption, even worse than we saw earlier, which sucks. So, I don't have a spin on that. What I do think is they just opened 2 new factories in 2 new markets that aren't in China, and there couldn't be a better time for that to happen. But what I do suspect is that China is going to be challenging for Tesla over the next 6 months. I think it's a short-term issue, and I think it will hurt production on the short term, but I think they're going to make it up in the other factories because I think what we're going to see is tremendous productivity and growth in Berlin and Austin. And so I think within 60 days, they'll have figured out how to make up all the production that might be lost. But I think for sure we're going to see that in the quarter, and I don't think there's any spin on it.
Elon Musk just gave a shout out to the Tesla China team and the Shanghai factory, talked about how it's been a record quarter on many levels. But the latest headline saying Tesla, Ross, is working on a dedicated Robotaxi with no steering wheel or pedals. Of course, Elon Musk has, talked quite boldly about things that will come in Tesla's future. And many things have taken a while to come to fruition. Some haven't quite yet. But do you like the sound of that?
Yeah, I do. And I think this is really more a byproduct of the convergence of the full self-driving technology, which is making a lot of progress currently, along with the idea of having a cheaper vehicle that would cost less money, like let's say $25,000 to $30,000 price point instead of $50,000 to $60,000 price point. But instead of selling that cheaper vehicle, we've seen tremendous demand from the rental car companies for low-end Teslas, whether it be Hertz or others. And so I think Tesla's like, well, why should we make rental cars, or robo-taxis for everybody else? We should make them for ourselves, and especially this new vehicle, which is using the new battery cell technology. So what I suspect is that Tesla feels they can build low-cost vehicles using all their technology in battery technology as well as full self-driving to create this sort of master yellow cab without a human in it. And I think that that's a reality. It's just how long it'll take. And I think that's really been the challenge with Tesla. It isn't the vision, it's how long it takes to achieve those visions. So I don't know how long that's going to take, but I wouldn't be betting against Elon. That's for sure. I'm betting with him, and I'm betting more with him.
Well, he's saying he hopes to reach volume production in 2024 and says this will be a massive driver of Tesla growth. Timing for us, interesting. I recently sat down with Aisha Evans, the CEO of Zoox, on the latest Studio 1.0. Zoox, of course, is the self-driving robo-taxi company that Amazon bought for over $1 billion. We're going to see a clip of that later in the show. Ross, Gerber Kawasaki, always good to have you and your colorful opinions here on the show. Thank you for stopping by.